Prabhudas Lilladher. Ajay, good morning. Let me just first get a sense of what you're tracking. We were looking at a global sell-off and the SGX and pre-open were indicating a weak start, but markets have actually kicked off fairly flat. What do you think we'll be watching out for now going ahead? Assembly polls, of course, exit polls are indicating a clear majority for the BJP. Results not due till Sunday.
I think the market is being pulled into opposite directions by the global cues, which are increasingly negative, and the domestic cues, which are increasingly positive. So we'll have to wait and see, I think, for semblance of sanity to return to the global markets, and then we'll see a lot of buying emerging in the Indian equities. Now, speaking of the global cues, I think there are not one or two, but a multiple negative cues which are weighing on the markets in different geographies. We saw yesterday a sell-off in Greek securities, and Germany slashing its growth forecasts, and that has brought back memories of the EU sovereign debt crisis. Now, moving on the other side of Atlantic, we are seeing a bigger than expected drop in US retail sales, and that has sort of created fears that the global slowdown will weigh on the US growth, which is moving at a very strong clip. Also, I think the scare of the Ebola virus, we have seen deaths both in the UK, US, and now in Germany. And lastly, China, I think, posting the slowest consumer price growth since 2010. On the other side, I think, you have an extremely strong thumping majority that the BJP is expected to garner in both Maharashtra and Haryana, two extremely crucial states from the economy's perspective, contributing 17% of the country's GDP, and having the growth centers like Mumbai, Pune, and Gurgaon within the two states. We're also seeing the global crude prices at 4-year lows. And if there is a time, as Mr. Rajan had said last week, for the government to move ahead and boldly embrace reforms on decontrol of diesel, it is now. I think we already are seeing over recoveries of around 2.5 to 3 rupees in case of diesel. And the expectation is that now that the elections are through, the government should announce first the decontrol of diesel, and then it should slash the prices of diesel. Now, that's a very important chronology the government needs to follow. It needs to first decontrol and then cut prices, because that will be taken very positively. And also some move, albeit a measured or calibrated move on slight increase in LPG prices on a monthly basis, a token increase, say 5 to 10 rupees, but on a monthly basis on the same lines as diesel price increase was put in place by the UPA government of 50 paisa per month. Also, I think the other commodity prices, you look at iron ore, thermal coal, coking coal, almost all of them are at multi-year lows. Agri commodities are at 4-year low. Now, this spells great news for the macroeconomic position of India. Current account deficit, fiscal deficit is going to come up quite sharply. Inflation is under control. We saw WPI numbers been extremely benign. Food inflation is under control, and hence CPI has come in very strong, has come in at very benign numbers.
Fair.
So I think, in my opinion, the Indian equities will have a strong inflows once there's a semblance of sanity, and one could look at buying Indian equities on dips strongly.
All right. So that's as far as the broad market strategy is concerned, Ajay. But let's talk about a couple of the newsmakers today. You got DLF, up almost 8.3%, but again, it had seen a 28% collapse on Tuesday itself. So fair enough, you will see probably a technical rebound or a little bit of a rebound on that counter. But any thoughts on the development surrounding DLF here?
Yeah, I think the worry obviously is that the fact that the promoters and the directors and the company has been choked off from accessing capital markets, and the company has a very large amount of debt on its books, and it is expected that the companies also will come out with REITs very soon. So I think this entire plan sort of gets scuppered, but I think the company would move to the higher forum and appeal against the order, as it has done in case of the previous order by the Competition Commission. So there are multiple avenues available for the company to go and appeal against the current order. I think the drop was excessive, and hence we are seeing a modest bounce back in the company. But I think overall, I would still sort of trade very cautiously in some of the high beta names like DLF.
Ajay, Bajaj Auto, did you have a look at the numbers? The way it actually played out, stock's been down by nearly 1.2% today.
Yes, I think I had a look at the numbers, Priyank, and our analyst is estimating a growth in earnings for Bajaj Auto of 14%, a compounded annual basis between FY14 and FY16. And if you juxtapose that against the numbers that he is expecting for the nearest rival, Hero Motors rather, he's expecting a 25 to 27% growth in earnings CAGR between 14 and 16. So our analyst clearly believes that it makes sense to get into Hero Motors if one has to take an exposure in two-wheeler space rather than Bajaj. I think Bajaj has been losing market share. One will have to sort of, and the valuations also are not supportive in our view. So our preference clearly lies with Hero Motors in the two-wheeler space.
Your expectations from TCS today, Ajay, and how you expect it to stack up versus an Infi?
Yeah. I think our house view is we prefer Infosys and Wipro in the large cap space, along with Tech Mahindra and KPIT in the mid cap space. Although we are expecting TCS numbers to be extremely strong. I think we are expecting roughly between 53 to 53 and a quarter billion rupees of earnings for TCS. Our belief is that with Mr. Sikka firmly in the saddle in Infosys and spelling out his medium-term strategy of moving, of balancing sort of the consulting business as well as the regular business of Infosys, the valuations being supportive. I think Infosys continues to be our preferred pick in the large cap space, followed by Wipro.
All right, so that's as far as the IT space is concerned and what's really happening there as well. Let's quickly mention some of the mid caps that are in focus today as well. You're seeing a couple of them actually see some good traction today in terms of the way some of the mid caps are actually panning out. You've got some of the names from the infra space that are on the move. Arcom's getting some bit of traction, 1.5% higher on that counter. You've got Mahindra Holidays up almost 5% odd. Decent volumes coming in an early trade for that counter as well is what we're seeing, and the index is actually trading in positive as the BSE mid cap space that we're actually seeing right now. Ajay, very quickly, one or two mid caps that's on your radar right now?
Yeah, I think in the capital goods space, both Cummins and Crompton Greaves continue to look quite attractive with a medium-term perspective. We are expecting the aggregate demand to start picking up from the fourth quarter of current financial year. And these two companies would, in our opinion, be prime beneficiaries. Also in the road construction sector, I think we are very positive on Ashoka Buildcon. The company has a strong order book of 4,000 crores, and we are expecting a slew of orders being bid out by the NHAI in the next 2 quarters. And the company is ideally placed in our view. In fact, our analyst is predicting a doubling of order book over the next 1.5 to 2 years in Ashoka Buildcon. So that's another company we could look at. In the agri space, I think we are very positive on UPL and PI Industries. In the cement space, JK Lakshmi Cement continues to look quite attractive. The company has strong expansion on the anvil. Sure. In the fourth quarter of the current financial year, a couple of million tons is going to come on stream, right, followed by in the next financial year. Britannia Industries in the FMCG space looks quite good, along with Motherson Sumi and LG Balakrishna in the auto ancillary space.
Fair enough, Ajay. Always a pleasure talking to you. Thanks so much for stopping by this morning and getting us your thoughts and perspective in terms of markets and a couple of the mid-cap picks as well. All right, so that's the way PL is actually looking at markets right now, but it's actually been fairly stable, and in spite of the way global routes actually been playing out, well, take a look at that. Market's been holding on to